Good evening, everyone. Welcome to Banao Bharat Trading for Living Wednesday live session. Well, kind of peculiar day today for both Nifty and Bank Nifty. Both starting off on the same type of setup, but the end of the day they have traveled quite differently. This is the Nifty chart today. Today I would say it's more of a Bank Nifty. Before going into the Bank Nifty charts, let us just start seeing how Nifty started off the day. It started off around 19,350 range, makes a low at 19,352. From there on comes to the resistance of 19,432. 19,432 happened to be day before yesterday's high, and yesterday we all know it made an attempt to cross 19,432 but stopped at 19,430, made a lower high, and then by the end of the day it had started clearly establishing itself on the downside with more than 4 or 5 red candles and the trajectory building up very clearly onto the downside. In line with that, today it opens around yesterday's close of 19,350-360 range, makes a low at 19,352. From there on goes back and tries to clear the resistance at 19,432, but it fails and makes only higher up to 19,456 before closing at the resistance of 19,432. So this is the story of Nifty. But Bank Nifty, you can see here, it didn't take much time to clear the resistance, which was at 44,216. That again was a day before yesterday's high, and again yesterday Bank Nifty had made a high of 44,196 below day before yesterday's high, which means lower high was already there, and by end of the day it had also started clearly establishing downward trajectory with sufficient red candles, and closing also was around 44,050 levels. Today it opens around yesterday's close, goes low and makes a low of 44,016. From there on it doesn't waste much time to clear out the resistance at 44,216 and closes the day at 44,550, which is significantly higher compared to the resistance that we saw for Nifty. In spite of Bank Nifty going up almost 450 points on futures, Nifty closes just about 45 points up, which is 0.25% on Nifty, and it is almost 1% plus for Bank Nifty. So this is a very good close for Bank Nifty, and what is more interesting is tomorrow both Nifty and Bank Nifty will start off on a different note, because today's setups wherein Nifty has closed around the resistance levels, has failed to clear the resistance similar to Bank Nifty, whereas Bank Nifty has very clearly taken out the resistance and closed way above that, and it is now hovering around 44,500. So this is a very significant development. Yes, we know there is some RBI meetings going on, maybe because of that Bank Nifty has already done its move, and tomorrow will it carry on the momentum, or will it kind of struggle or come down, and will it also bring the Nifty along with that, is what we need to wait and watch. For now both will be starting on a kind of different note, so that is what we need to keep in mind for today. Both will excuse me so both will be interestingly watched. One, we know for sure Nifty is struggling to clear the resistance, and Bank Nifty has comfortably stayed above the resistance. So how will tomorrow pan out? Tomorrow being a monthly expiry for both Nifty and Bank Nifty, it will be interesting day to take some positions and do some trade. Of course there will be big volumes tomorrow because of unwinding of trades as well as rollover of trades. So either way, keep your position size in control, so that even even if you get it wrong, even if you get the entry setups wrong, you can save yourself if your position sizing is less. Either way, once you are into the position, always keep in mind the stop losses are very very important for trading. Whatever is the trade that you put in, ensure there is stop loss in place. At least if the stop loss is not in the system, ensure the stop loss is in your mind before you enter the trade. Every trade we cannot be winners, or every trade we will not be losers for sure, but the problem with most traders are when they lose more, and when they make less. So once you reverse this trend of losing more and earning less, then you will start seeing big improvement in your trading journey. All that you have to do is switch your trades in such a way, when you lose, you will be losing very less, and when you make, you are giving enough room for market to give you whatever it has to give you. Especially if you are an options trader, always be net long in options and not net short positions, because if you are an option writer, or if your net option portfolio is having a credit, then it means you have limited premiums collected, and if that particular trade goes right, then you will end up only getting the limited profit, and you will always be feeling bad about not making that 5x or 10x kind of returns. Anyways, now that there are expiries on every day of the week, there is going to be some expiry trades available for you, and expiry trades are the trades where you can make 2x or 3x or 4x kind of returns. May not be all the weeks, but definitely there is room for making that kind of returns in expiry trades. So you have to position yourself in such a way, whenever market goes in your direction, you get to harness the entire movement in your favor. Even when the market goes in your direction, if you make only limited money, then when the market goes against you, anyway it will take more than whatever you were planning to give to the market. So that being the case, how you construct your option portfolio is very important, and especially in expiry trades, there is always room for multiple times returns. So position yourself in such a way that if you are right and market performs as per your expectation, then you will definitely see that kind of alpha and that kind of exorbitant returns in your favor. And if you are losing, you have to lose as little as possible. So sometimes they call it as risk reward ratio. Always if you have more than 1:1 risk reward ratio, then there is always you can afford to be wrong in your entries. If your risk reward ratio is less, then you have to be that much more right in your entry setups, which is sometimes quite difficult. Just like today, both Nifty and Bank Nifty both were having a very similar setup, but they ended up entirely different. Nifty honored the resistance, stayed within the resistance area, but Bank Nifty we saw we had to take the stop loss, and the way it has moved. Yes, we exited little early, but still we didn't have the courage to go long even at our stop loss levels. If we had done stop and reverse, still we would have made some decent money, and we would have covered morning's losses, and we would have ended in net profit. But generally we take only one trade a day, and especially when there is a loss, we definitely just take the stop loss and stay out of that day's trades. That has been our practice, which has kind of saved us many a times. We don't do revenge trading because there is no point in trading against the trends. Yes, today it has been there was a trend reversal, but we didn't have the courage to do the long trade on Bank Nifty. But many a times it is good practice, once your stop loss is hit, it's just better to exit the trade and stay out for that day, and in the coming trading session just reduce the overall trade size. So day 1 if you lose money, day 2 you start off with a lesser exposure, and you make money out of that, and on the third day you can increase the exposure. The single thumb rule that you can follow is, if you lose on any given day, next day's trading position size has to be lesser than today's position sizing. Either it could be 75% of yesterday's trade, or it could be 50% of yesterday's trade, or some kind of it should definitely not be 100% of yesterday's trade, because whatever capital you had yesterday, today you are beginning with a lesser capital. When you are beginning with a lesser capital, yes, automatically there will be lesser positions that you can take, but on top of that you also build a mechanism in such a way that you can reduce it to 75% of the trade, make money in that 75% of the trade or 50% of the trade, and then once again on day 3 you can increase the exposure. So having said that, if you are liking the content on Banao Bharat's channel, do subscribe to the channel, and if you are interested in learning the mechanics of stock markets, then you can call us and we will be glad to help you. We don't have any holy grails, or we don't have any secret strategies to teach. All that we teach is classical trend following mechanisms, wherein you will get some kind of a handle if you start thinking on our lines. So with that, you can become an independent trader in maybe 6 months to 1 year's time, and then you can have a profitable trading journey. Having said that, tomorrow's expiry weekly and monthly expiry is going to be very interesting. Both Nifty and Bank Nifty will start off on a different note. Let us see how the day pans out tomorrow. Let us once again reconvene if possible in the morning itself during the market hours. Until then, Om Swasti.